Hare Krishna. Welcome to Tax YouTube channel. This is CA Rohanar Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series What Law Says. And today we are going to discuss two important case laws under income tax law reported to ITAT. So let's dive into it. Let me allow to share my screen. Yes. So in recent times, Income Tax Appellate Tribunal, that is ITAT, has delivered several landmark rulings clarifying scope of the statutory compliance, that is Section 44AB, meaning of charitable purpose, Section 2, subsection 15, eligibility for registration under Section 12AB. So these rulings are very recently in January and February dated 2026. So are extremely relevant for chartered accountants, trust or NGOs, CSR entities, statutory bodies. So the two selected cases highlight what compliance versus exemption conflict, charitable purpose versus commercial or CSR activity. So the objective of discussing these cases to understand interpretational trends of ITAT, that is tribunal. So to guide professionals in litigation and advisory, to highlight practical compliance risks. So let's start with today's first case. So today's first case is Jalpaigura Zilla Regulated Market Committee versus ITO. Date of order 10th February 2026, very recently, and ITAT Kolkata is included here and pertain to scope of statutory compliance under Section 44AB. So let's understand facts of the case. So assessee was Agriculture Produce Market Committee, APMC. Nature was statutory body under state law. Relevant assessment year is 1780. So key facts: no return of income filed. Huge bank deposits around 2.40 crore. Assessment completed ex parte under Section 144. Turnover estimated based on bank credits. Profit estimated at 8%. Penalty initiated under Section 271B for non-audit. So assesses contention income exempt under Section 10, subsection 26AA. Hence, no requirement of audit under Section 44AB. Very interesting. So let's understand what was the issue under consideration. So whether tax audit under Section 44AB is mandatory when income is exempt, but turnover exceeds the threshold limit. Very important. What was the issue? Whether tax audit under Section 44AB is mandatory when income is exempt, but turnover exceeds the threshold limit. Let's see. Relevant legal provisions, Section 44AB, that is mandatory audit if turnover exceeds prescribed limit. Section 10, subsection 26AA, that is exemption for agricultural produce market committees. And Section 271B is relevant to penalty for failure to get accounts audited. So these are the legal provisions involved in given case. So let's see what was the grounds of the appeal. Assessee argued that being exempt entity, no audit requirement. What assessee argued that being exempt entity, no audit requirement. Statutory audit already conducted under state law. Penalty unjustified is what assessee contended. So what was revenue's argument? So revenue argued that turnover threshold exceeds. That is very important. Main part of the Section 44AB. Audit requirement independent of exemption. So main argument or ground of the related to the appeal by the revenue was audit requirement independent of exemption. So let's see what tribunal observed and held. So ITAT held that Section 44AB applies irrespective of the taxability. What? Section 44AB applies irrespective of the taxability. So no exemption provided for entities with exempt income. Compliance obligation triggered by turnover and not income. What it again held that the compliance obligation that is of the audit triggered by turnover and not by the income. So key reasoning here, audit requirement is procedural compliance. Exemption provisions do not override the compliance provisions. Exemption provisions do not override the compliance provisions. So audit under section 44AB is mandatory. However, penalty may be examined based on the reasonable cause. So matter partly remanded in some aspects. Very important. So let's see what was the principles laid down by this case. Turnover-based compliance principle and not income-based. So exemption is not equal to exemption from the compliance. Audit obligation independent of the tax liability. So distinction between the assessment provisions and compliance provision. So the it was held that main important fact is that the audit under section 44AB is mandatory irrespective of your exempted. Okay, so that is the main thing. Moving further, let's also see the practical implications from this case. So even exempt entities must monitor what the turnover thresholds of their ensure tax audit compliance and important for APMCZ, trust and government bodies. So these need to be taken care of. Now moving further to case 2. Case 2 was Infosys Green Forum versus ITO. Date of order 12th January 2026. Again, very latest. ITAT Bangalore is involved and assessment here is not applicable. Pertain to what? Meaning of charitable purpose and registration under section 12AB. So let's see facts of the case. Assessee Section 8 company, that is CSR arm of Infosys. Activity involves solar power generation, that is CSR project. Power supplied entirely to Infosys Limited. Applied for registration under Section 12AB. Approval under Section 80G. So CIT exemption action was rejected the registration and cancelled the provisional registration. Very interesting. Let's see what was the issue under consideration. So whether CSR-based solar power activity qualify as a charitable purpose under section 2 subsection 15 and whether it is also eligible for registration under section 12AB. So very important here to let's see what relevant legal provisions involve. Section 2 subsection 15 which deals with includes preservation of environment, excludes activities in nature of the business unless conditions satisfied, and section 12AB that is related to registration for charitable trust or institutions. Let's see grounds of the appeal. Assessee argued activity falls under preservation of environment. CSR activity is for public benefit and revenue generation is incidental. Whereas what revenue argued that entire benefit going to the Infosys Limited, activity is commercial in nature, no public benefit involved is what revenue argued. Very much interesting. Let's see what ITT observed. ITT observed that solar power generation can be charitable, but must benefit public at large. That is what it lags in given case. It observed that it must be benefit public at large. So in the given case, entire power supplied to who? Infosys Limited, okay, to the company only. No public benefit involved here. Environmental benefit only incidental is what ITT observed. So what ITT held? Dominant purpose test failed. Activity primarily for private benefit of the company, not public entity, not public utility. So hence not charitable under section 2 subsection 15 and therefore not eligible for 12AB registration. So what principles laid down by this given case? Dominant purpose test is important. Public benefit is essential and CSR activity is always not equal to charitable activity automatically. Incidental environmental benefit is insufficient because it should be benefited to public at large. So private benefit disqualifies the charitable status. So what were the practical implications. So CSR entities must ensure what activities benefit to the public at large, not just parent company, that is in given case Infosys Limited. So important for Section 8 companies and corporate CSR structures that they are need to be note down these particular things. So that's it for today. Thank you. Thank you so much for patient hearing. Hope you are getting valuable knowledge from all these video series. So if you are any questions, observation, queries, suggestions, then do let me know via WhatsApp. You can also comment below the video or you can also email to me. So if you are not yet subscribed Tax Guru YouTube channel, then do subscribe for latest updates and video series like this. Thank you. Thank you so much once again. See you soon. Bye bye. Take care. Hare Krishna.